Good day, all. This is Brian again. Let's see. Today we're going to be taking an intro to moving averages, or maybe more specifically, exponential moving averages, or as they're commonly referred to, EMAs. Let's get into the definition first, and we'll take a look at what they do and how you use them. A type of moving average. It's similar to simple moving average, or to simple moving averages, except more weight is given to the latest data. Basically, it looks at the current candles and looking at a longer time range of candles in the past. One of the advantages of exponential moving averages, it is a lagging indicator, but it will respond faster to the market than a simple moving average. Basically, it will update with the market faster than a simple moving average. That's pretty much what they're for. Let's see, what do you use them for? I typically, the majority or my bread and butter is made, I trade reversals on a ranging market, but on a day that the market is trending, I have to be able to do something or just go play at the park or something. So what I do is I trade the trend. Exponential moving averages, or EMAs, are great for trend trading. They make it, I wouldn't say easy, but they make it pretty clear on what the trend's doing, and they can, if you use them correctly, can highlight a good entry and exit points. Or for binary options, what you're using them for, when I trade reversals, I trade 5-minute charts. When I go to trending, I up my expiry to 15, 30 minutes, or sometimes even an hour. I would say out of all my strengths, I'm definitely a great reversal trader on a ranging market. Trend trading is not my biggest strength, but I've gotten it down to the point where I'm consistent in it, and I can use it to make money. I am just more of a conservative trader when it comes to trend trading. So let's take a look. How do you add them on? And we'll take a look at how they react to the charts. So to add an EMA onto the chart, you're going to go into Insert, Indicators, Trend, and it says Moving Average, but I'll show you how to make it an EMA. So we do Moving Average, MA right here, Parameters tab first, period 14, shift 0, MA method. So we always want to switch that to exponential. Okay, so period. What is the period? So let's start off with the first one I use, 5. And we'll make it red, and we're going to make it kind of big so you can see it in the video. Okay, so this is a 5 EMA on the chart. Let me change the color on it so it'll stick out. I didn't realize. We'll make it a blue. Okay, so now you should be able to see it nice and clear. A 5 EMA sticks to price rather closely. It is one of the fastest EMAs that I will use. Give me 1 second. Alright, sorry about that. Okay, so a 5 EMA is one of the faster moving EMAs you'll use. It sticks very close to price, and it doesn't lag much behind it. So what's the difference between a fast moving EMA and a slow moving EMA? Let's look at the one that I use for max. So again, we go to Insert, Indicators, Trend, Moving Average. When it comes up, we're going to do, I believe 55 is my highest I use. And we'll change the color to funky pink, magenta, whatever it is. This one does not respond. We're on a 5-minute chart, by the way. This one does not respond to price very fast, but it gives you the overall picture of what the trend is doing. It would actually be considered a medium length EMA. It's a 200 would be the longer term to see what the overall trend is doing, but the 55 is a medium length and the 5 is a short length EMA. So now that we know basically what the time period does, basically the smaller the number, the faster it works with the market or responds to the market. Again, EMAs are a lagging indicator. They show the market after it's happened, but they're still a very useful tool. I mean, they're probably one of the most popular tools out there. So let's take a look at my setup that I use. I'm not going to do the complete setup for you, but just so you can give you an idea. And then at the end, I'll cover some of the tools you can use to finish it up. This is actually a viable way to trade today. I wanted to show EMAs, but they're so simple to use, but they do require a little bit of knowledge. But they are simple to use and a great way to trade the trend. So let's go ahead and get it set up. So far we've got a 5 and we got a 55. So to balance it out, we're going to put in 2 more. We're going to do an 8, and then I'll explain how you use them. For 8, let's use yellow. Now, the yellow, as you see, it's a little bit slower, so it doesn't respond quite as fast as the 5 to price. And the last one we are going to use, insert, sorry, alert. Okay, let me move that out of the way so we don't get it keep popping up. Okay, so the last one we're going to use is a 21. If you happen to know anything about Fibonacci or you researched it, if you'll notice, all my EMAs are Fibonacci numbers. For this one, let's go with let's go with a blue violet. See how that looks on there. Okay, so now we have a set of 2 fast moving and a set of 2 medium moving averages. Now, as you can see, the blue and the yellow are fast moving. Look how quickly they identified a downward moving trend. The 21 started to identify it, but we're what, 1, 2, 3, 4, 5, 6, 7, 8, say 8 or 9 candles in, so that's 40 minutes into the current downtrend before the 21 gives us a picture we're in a downtrend. And the pink one, that is our 55, and I mean, we're a good hour and a half into the trend before it identifies it. So how do I trade with these? What you would notice as, and let's keep them in groups, we have fast moving and slow moving. So let me remove, see if I can figure it out real quick. We're gonna, okay, here's our 55. I'm gonna remove the 55, and I believe this should be the 21. So you can get an idea of how I trade. When they are tight together, or they're crossing over. If they cross over, it means a trend reversal. But since these are faster moving EMAs, they're going to cross over. If they start to, I guess you could say, braid or cross over consistently over and over and over, you're in a choppy market. You definitely want to stay out of it and you don't want to trade. But as these two levels move apart, it's a good time to place a trade. The farther apart they are, the more set we are in a downwards trend. Now, here we got a little bit of consolidation, but if you notice, they never crossed over, and it continued. The spike, it went up, and they crossed over, but they immediately start to spread apart again, and they come together again. So if you can kind of see the pattern here, they get wider. When price consolidates, they got closer, and they finally crossed over, which would, in some cases, and this is where the higher time frame comes in some cases this crossover would mean a trend reversal, meaning trend was going to start moving upwards. But that's why we're going to have the medium length ones on there to keep you out of a fake signal. And again, then it comes back down, they spread apart, and right here they touched, maybe would have had a possible upwards reversal, but let's add those higher time frames back in and see what we can filter out this reversal and this reversal. So if we go into it again, go insert, indicators, trend, and we're going to do moving average. We got 21 there still, it's lovely color. And let's purpley whatever. Insert, indicators again. Let's throw that 55 on there. And I don't remember what color it is, we'll just do the pink again, I think it was. Okay, so now what we have, this downward trend, the medium speed EMAs did not catch this downward trend till right about here. So if you're a very, very conservative trader, you would have ignored this until the crossover here. Now we know we're in a downtrend. Reason being the faster moving one is now below the slower moving one. So this point here, we would have had a great entry right about, if I had to pick it out, I would have probably entered on this candle, somewhere in this area. Reason being, our medium speed indicators caught up, they're starting to spread out, and our faster moving indicators are spreading out too. So we get down here, and you could ideally, close the trade out here. And this is FX, or if you took a longer term binary options trade, 5, 10, 15, 20, 25. A 30-minute trade would have been great. Heck, even an hour would have been great because price hasn't come back up. The other thing I look for is I look to enter on a pullback. Price came down, came up a little bit. So I start watching on all these pullbacks. Like here, this would have been a trade right here. And now over here, it's starting to spread out. I would be looking for an entry somewhere right here where it is now. The reason the reason by my indicators I would say the trend is still going to go downwards is our medium speed indicators are indicating. Look how wide they are. They're not even starting to get close to each other yet. So the trend is still going to go downwards. Let's zoom out a one just to see how that looks. So as you can see, widening, widening, widening. The trend kept going up. Now the trend came down. Same thing here. We have several entries here if you look through them. I'm not going to point them out because from what I showed here, you should be able to look over here and see a few entries. But same principle. Keep it in mind. Price is moving up. Got a pullback. Everything started to widen here, widening here. So we're looking at an entry for a binary options entry. Let me say that again. Somewhere right in here. 5, 10, 15, 25, 30, upward moving. So if you're like me and like when I trade reversals on a ranging market, I do prefer a 5-minute market. But if some days there's just no ranging to be had and you got to trade the trend. So this is a great way to do it. You can add on, let's see, stochastics, RSI, value charts, anything to help you identify overbought, oversold to help you get a more precise entry. I'm going to be doing a video on all the ones that I mentioned there, so you'll be able to add them in, but this way you can start to see the bigger picture of how you can combine indicators to get a good picture for entry. If you have any questions on EMAs, again, to ask them on the forums, hit me up on Skype, email me, don't matter, just get your questions answered. Hope you enjoyed the video, and I'll see you next time.